Hello, today we have Oren Elkayam on our show. Oren is the CEO and founder of Mobilicom, trading on the NASDAQ under the ticker symbol MOB. Oren, welcome to the show.
Thank you. Thank you for having me.
You're quite welcome. Mobilicom, Oren, a top end-to-end provider of hardware and software solutions in the rapidly growing defense and commercial drone and robotics market. Start with a brief overview of your business.
So at Mobilicom, we design, develop, and sell the brains, the smart solutions and systems that are the cores of drones or robotics. We provide the hardware, we provide the software, we provide the cybersecurity critical systems that are the core and soul of the drones or robotics, selling to all drones or robotics manufacturers worldwide.
I like the way you say that, the soul of the drones. Now, how big is the addressable market for these solutions?
So drones or robotics revolution is huge and big, and it's definitely a market which is very sizable today, over 30 or $40 billion market, which is growing phenomenally over the next years. The total addressable market for Mobilicom is around $8.5 billion, which is composed from the hardware and software and cyber elements which in the general market. And we are pursuing mainly the small size drones or robotics, which is going to be the market that is going to grow significantly in the next 2 years. It's also the market which is very interesting because it has the opportunity to sell again and again to the same manufacturers that has to replace their drones or robotics very often, every 3-4 years. And it's the market that is going to experience hockey stick jump in those couple of years. So $8.5 billion market, software and hardware, in a lucrative market that is exploring very high growth over the next 2 years, focusing on small size professional drones or robotics for defense and commercial.
Now, in that growing market, Mobilicom has clearly gained traction. You have amassed an impressive client list, Oren, with 50 design win customers, and you have various top-tier drones and robotics manufacturers. What can you tell us about your current customer base and your plans for continued growth?
So we carefully set a strategy for Mobilicom, focusing on tier 1 players, identifying who are the incumbent and who are the newcomers to this market, which is new, that are going to take first places and be the leaders of this industry. We carefully identify the markets of creating the technology and the hub of creations of drones for robotics, being US, Israel, and Europe, which are very important. And those are the largest markets today that are selling worldwide. Within those markets, we identify the key players, and then we decided to target them one by one and try to capture and integrate and cooperate with those. In addition, we have a second tier players that we are targeting, those that are going to lead significant programs, both on defense and commercial, in this exciting small size drones and robotics market. And this is the core companies that we are pursuing and won over the last 2 to 3 years. So we are having the greatest and the biggest first tier and second tier players across Israel, US, and European markets.
Extremely exciting, Oren. Who are some of these big names? I know some of them are household names.
So definitely among the top tier players that we are working with, which is not a secret, are leaders in this field. For example, in Israel, we are working with the top 3, the Israeli aerospace industry, IAI, which is the biggest provider of defense and solution of aerospace to the world from Israel, including drones or robotics. So we have an exciting new solution with them that is right now getting to the market. We have LYT, which is under the NASDAQ, the ticker is ESLT, which we had several programs with them on different fronts. We have Rafael, which is one of the biggest loitering munition provider to European NATO countries as well as worldwide customers. Obviously, the Israeli Minister of Defense is one of our customers and best references in the world. We continue to expand into Europe and into the US. We have customers like Airbus, the biggest aviation company worldwide, Teledyne FLIR, which is a top of the line company in the United States in this field, ticker is TDY on the New York Stock Exchange, and many others that are working with us, including top-tier players in Asia and some of the Middle East as well. So we are well spread across 18 countries with the biggest names as part of our customers in the majority or the major markets of drones and robotics and leaders in this world.
All right, Oren, it is definitely a growing market, and you are definitely getting traction in it. Now, how are you going to make money? What's the business model?
So we have two streams of revenue from Mobilicom. One is repeat sales of the hardware solutions that are the core of the drone system. Those are having a very lucrative margins of 50 to 60%, depends on the solution and the platform. And we are reselling them again and again because, as I mentioned, small size drones or robotics have to be replaced very often because they tear and damage very fast. So every 3-4 years, customers have to replace their fleet. On top of that, we have the new solutions of the cybersecurity and cloud software solutions that Mobilicom brought to the market that shows some success recently, although they are new, to penetrate significant customers like the Ministry of Defense of Israel. Those are license-based solutions, recurring revenue, license, SaaS model approach, which are sold either to the defense market or to the commercial market. So we have the great balance of two, selling high gross margin hardware, repeat again and again business, as well as licensing software and cyber solutions, which is very appealing for customers and investors, both as a marketing growth engine going forward.
Investors are always going to want to know about the financial position of the company, Oren, and in particular, what kind of a cash runway are we looking at right now for Mobilicom?
So Mobilicom recruited $13.3 million back in the IPO about a year and a half ago, that we plan to use that for the next couple of years from the IPO. I'm happy to say that as we are really solid on our performance and activity and delivering on our outcomes, we managed to stay with very long prospect for that. We can have more than 2 years to go based on that. The additional funding that we took lately extend that even more and enable us to expand our investment in growing faster and bigger in different markets. Obviously, the recent achievements and wins that we had gave us new opportunities. So the new funding will enable us to accelerate the business growth. So with the funding that we have in hand, we have much more than 2 years to go to execute the existing strategy and win big time. In addition, we have zero conversions of any kind. We have no debt. We have no credit lines. So a very clean company from all aspects of debt and lots of cash in bank to execute the strategy and get to the home run and make it a very big success.
Oren, for any company, and especially for a microcap company, management is key. Who are some of the key players on your team?
So obviously management is a very important piece of the puzzle. Together with me, Mobilicom was founded by Yossi Segal, which is the co-founder and very successful technology person worldwide. Yossi was a leading person in creating technologies and patents around the world, leading standardization activity in the United States, part of the IEEE standards organization, and contributing to the industry over the last 20 years. In addition, we have leaders that we took from the cybersecurity market in Israel that help us to create the next generation of offering of Mobilicom, like Udi, which is the GM of the Israeli side. We have additional members on the sales side that help to grow companies from zero to tens of millions of dollars in sales, that establish companies that growing and selling to Fortune 500 among our team members in the United States, Europe, and Israel. So obviously we took people that can deliver on operation, on sales, on the finance, on the execution of innovative technology. And all of those members done it again and again, bringing small companies to great success. So we have the right team to scale the company and move to the next challenges, overcome them, and bring the success to all shareholders.
In summary, Oren, what is the essential value proposition? Why should investors take an interest in Mobilicom right now?
So Mobilicom is uniquely positioned. Unlike other companies that are selling drone solution or bringing one piece of the technology puzzle, Mobilicom is an end-to-end provider, selling all the critical solutions that drones and robotics manufacturers will need over the course of the coming years to establish their business. So we are one-stop shop, end-to-end provider of the critical technology solution. And by that, we are unique and no matchable companies doing that for the small-sized drones robotics market. In addition, we chose cyber and security to be our flag. We developed the most advanced solutions in the market of small-sized drones, protecting them against different attacks that are known today. So we are leaders in this field, and cyber will become a very important piece of the puzzle, and security and securing those operation and safety of those platforms is essential for the success and scalability of this business. Together with that, we have a wide portfolio of products, a very wide IP and know-how, which is already granted. We have technology and significant customers already in hand, working with us and scaling to initial production and beyond. So we have the technology, we have the patents, we have the product, we have the business and customers existing with us. And I think that we are in unique position to take advantage of all those achievements we've done in order to bring it to the next stage of high growth, high success company.
That is a very interesting story, Oren. Thank you for sharing it with us today.
Thank you. Thank you very much.
Hello, today with us we are pleased to have Dharmesh Pandya, CEO and Managing Director of Lytus Technologies, trading on the NASDAQ under the ticker LYT. Dharmesh, welcome.
Thank you, Craig. Pleasure to be here, and thank you for having me on RedChip TV.
You're quite welcome. Can you provide us, Dharmesh, with a broad overview of Lytus Technologies, particularly focusing on the core aspects of your business and how it stands out in the current market landscape?
Absolutely. Craig, Lytus Technologies was a labor of love that we set out to form back in 2019. And Lytus Technologies is a platform technology services company. And this was a culmination of my entire management team's experience over decades. And we were very excited to try and put together a technology company which was built on a series of successful models that we'd seen developed over the last 2 decades in China and the US. Essentially, we are a company that sets out to build its own ecosystem of subscribers. And to that captive ecosystem of subscribers, our intention and our business plan hinges around the fact that we add additional services as we go around the process of value accretion and value addition of services to customers. So yes, we're very excited in this process. We started off this journey with the intention to grow our subscriber base as quickly as possible. But over the years that we've been in business, we've also driven our focus to ensure that we continue on this innovation cycle of adding additional services to this captive group of subscribers.
Now, your origins are in India, and the company is active there. I want to talk about that a minute. And given the rapid expansion of digital services and, of course, telemedicine, which I'm sure you're going to be wanting to speak about here, in India, the country with the highest population in the world, Dharmesh, can you elaborate on the size of the market opportunity, which I'm sure is huge, that Lytus is targeting?
Craig, I'd be lying if I didn't say that the size of the market and the opportunity that it presents is actually daunting. I continue to remind myself that it's not the task of any one company, but that's kind of what excites us as a company in terms of the fact that we're uniquely positioned. Obviously, a big portion of my management team has roots in India, but we've also spent over 3 decades here in the US working with companies in the Valley, mentoring startup companies as well. But we find ourselves in a unique situation where a lot of the innovation that we see in the US, we, through our ecosystem and our platform that we have rolled out in India, have the opportunity to actually roll out that technology to the almost remotest parts of India. And the telemedicine business was very unique because when we commenced Lytus Technologies, we were just at the cusp of the COVID-19 pandemic. And what that did was, in that window where mobility was hindered, and healthcare was a big concern for subscribers, the fact that we could use technology and provide relief and accessibility to our subscribers in a market like India was almost a form of validation of our business model. It was no longer just about being on a video call with your healthcare service provider. The access to remote patient monitoring devices, and even the hardest of environments where transportation was a challenge, access was a challenge. I think this encouraged us to know that, look, we could use state-of-the-art technology that we had access to in the US in the healthcare sector and deploy that around the world to communities that didn't have access to even regular, mechanisms for healthcare.
You talk about your business model. It is really unique. You talk about sticky subscribers. In fact, in our conversations offline, you and I were talking about your sticky subscribers. You're talking about creating an ecosystem for those subscribers. How do all of these components fit together, and especially the telemedicine component? How do they fit together, Dharmesh, to synergize and drive that business?
Craig, it's a very, very interesting question, and very early on, our management team, which has been around for decades and experts in their own field, realized that when we started off Lytus, we didn't want to necessarily just play the valuation game or the subscriber headcount game that was so prevalent in Silicon Valley. Our intention was to build a business that was predictable, scalable, repeatable, and which actually had the impact of including populations that were underserved with respect to technology from day one. Now, on the face of it, our subscriber acquisition obviously hinged around acquiring subscribers of existing cable companies. And even though that was not popular at that point in time, we learned very quickly on that, even though there was a lot of discussion around cord cutting, the fact that in a market like India, there was still a cable connection at home and one television around which typically a family would watch programming on a given daily basis or on a weekly basis. So even though people started consuming content on their phones and in their iPads, the cable connection in most homes still was an integral part of consuming content and delivering content into these consumers. From our perspective, the fact that these cable companies have been around for more than 2 or 3 decades, the infrastructure, the fiber, underground cable, all this infrastructure was valuable from our perspective because it gave us access to subscribers who were used to paying a monthly bill for access to content and the connectivity, which was an important part. In our world of technology companies, subscriber acquisition often becomes the biggest expense and the biggest challenge for companies. We like the cable company, path because we found these subscribers to be sticky. Cable companies, do not lose customers very easily. There is a churn in the business, but it's a very small component compared to other online OTT or content creating platforms. We started off that journey, and we were very comfortable that once we entered the home, we were then able to be the point of contact to offer additional services. So healthcare technology is an easy extension of that initial connection that we established with customers. Once you have a customer or a family, in this case, which consists on an average of 4 or 5 people per home, being able to offer the additional services in terms of healthcare, healthcare services or access to healthcare technology was an easy extension on our part without significant infrastructure expense. So the subscribers are already there. The infrastructure was in place. This is what made our model predictable, scalable, and repeatable. But more importantly, as you said, these customers are sticky. They've been around with the company and the cable company on the ground for decades, and for the most part, would continue to be our customers if we can offer additional services to them.
You mentioned those sticky subscribers. You're already in 1 million homes, which, as you noted, translates into 4 million people that you can reach. And you're aggressively attacking a massive problem in India, which is getting healthcare to people. I think that is just absolutely commendable. Another thing, Dharmesh, that my book, people I talk to in the investing world are always concerned about is managerial ownership. You have an extremely compelling story to tell there. Introduce us to your management team, and I want to hear about that ownership stake that you personally got in Lytus.
Craig, Lytus Technologies is, as I mentioned to you early on, was something we began as a labor of love. And essentially, my management team is essentially representative of each of these team members has been or has performed a role in a public company or as a public company CEO in their own capacities in their own careers. So I'm actually blessed with having a management team that is experienced, knows how to leverage technology into emerging markets and high growth markets. But more importantly, we're committed to what we do at Lytus Technologies. And I think it starts right from my vision. I believe in the story completely to a point where I currently own about 64% of the company. And the intention here is obviously that we are completely dedicated to growing this company, and we're as a management team, we're very excited at the opportunity in front of us. So in many ways, we feel privileged and blessed that we find ourselves uniquely positioned as Lytus Technologies as the perfect segue between what we've learned and what we've helped build in terms of the US experience, and then translating that into a high growth population like India, where we can actually see how technology makes an impact, amongst people. So I think that's something that we pride ourselves in. And yes, we've had tremendous support from investors in the past, and I think our commitment as a management team is to deliver value to our investors and to our shareholders. But obviously, to that process of making value additions to our subscribers overseas in India.
I just want to reiterate again to our viewers, we are now talking not just to the CEO of this company, but a man who owns 65% of the outstanding shares. Just totally commendable, and I wish you all the best with that, Dharmesh. Now, to wrap up, give us the elevator pitch, the value proposition. In a concise way, Dharmesh, tell us right now, why should anyone look at Lytus Technologies?
Craig, we are a very ambitious company. Even though we're about 5 years into the program, we're a very ambitious company. And if you see our metrics and numbers, we are undervalued, primarily because our focus has been to grow the company. When we look amongst our peers, there aren't many platform technology companies which are EBITDA positive very early on in their growth cycle. It's easy to kind of play the subscriber game and the valuation game. That's something that we have actively stayed away from, because we feel that through the growth of the business is where the value accretion happens. And this is a long-term play from our perspective, because the opportunity, the market size in the US and in India, obviously, as I said, excites us to a point where we think this is going to be our work's cut out for us for the next several years in the process. And look, I think we're committed to growing this in the process, not only in terms of the progress we've made, but there are additional offerings that we have contemplated and are working towards going to the process. And I think there's a dynamism in the two markets that we focus on currently in the US and in India. Over a period of time, we're going to be growing our US business as well in terms of the content creation platforms and telemedicine offerings in the process. So look, we find ourselves, as I mentioned earlier, in a unique opportunity where we're committed to making the most of that opportunity and converting on it. But I think from an investor perspective, we are obviously a good candidate for investment just on the metrics as we see right now. But my commitment and the management team's commitment is that we want to be able to kind of grow this company to even dizzier heights going forward.
We agree with you, Dharmesh, and I would say this is an interesting and even inspiring story. Thank you for sharing it with us.
Thank you, Craig. I appreciate the opportunity. Thank you.